Have you ever wondered how banks make money? Well, a significant part of the answer lies in something called fractional reserve banking. This is a system where banks are only required to keep a fraction of their depositors' balances on hand and are free to lend the rest out. This might sound like a complicated concept, but don't worry, once you get the hang of the basics, it becomes quite simple. So, let's dive right into it and demystify the world of fractional reserve banking. So how does this system work? Let's dive right in. Banks receive deposits from customers, say you and me, but they don't just sit on that money. Instead, they lend most of it out to other customers. This is where the fractional part comes in. Banks are required to keep a fraction of the deposits as reserves, while the rest is free to be lent out. Here's where it gets fascinating. The money banks lend out doesn't just vanish. It gets spent on goods, services, or perhaps even invested. This money eventually finds its way back into the banking system, perhaps into a completely different bank. And guess what? Now this bank can lend out most of that money too. This cycle repeats, and with each iteration, it creates a multiplier effect, effectively increasing the money supply in the economy. In essence, banks create new money through this lending process. Fractional reserve banking is a cornerstone of modern economies. But what are the key points to remember? Well, first off, banks profit from the interest on loans, which are primarily funded by our deposits. Moreover, this system inherently expands the money supply, creating more liquidity. However, it's not without risks. If too many people demand their deposits back simultaneously, it can lead to a bank run. And there you have it. The mystery of how banks make money with your deposits has been unraveled. Remember, knowledge is power. Thank you for being a part of the Goatwater Forum, and may your mind stay agile and adaptable. Before you go, subscribe, like, and click the notification bell. It is helpful with getting more content exposure.